What's up, everybody? Welcome to our weekly homework session. What up, Jay Mitch? What up, Jay? So on tonight's session, we're gonna discuss supply and demand, which is something that I think is extremely important. Really fundamental when it comes to understanding how markets work in general. And this, what I love about supply and demand is that it works for every single market, whether you're trading futures, whether you're trading shares, options, all of it. And if you can dive deep into supply and demand, and just understand kind of the basis of it, then I think it'll be very useful to pair with whatever your core setup is, whatever, things like that. So there's a few things I want to discuss, and I'm going to try to rip through this because me and my wife we have yoga tonight. We didn't do it this morning, so we have to do it tonight. So try to rip through this. And again, if anyone has any questions, go ahead and just stop me. If you want to chat, you can go ahead and chat in the study hall room. Let me see. Jay Mitch, you can also go ahead and chat in the study hall room. All right, cool. So can you guys see my screen? Okay, cool. Perfect. All right. So tonight we're going to discuss the definition of supply and demand, types of markets, balance leading to imbalance, how to spot supply and demand zones, time frames, validity, support and resistance, and just a little bit extra. And I have a feeling that there might be someone who can add to this section here. So yeah. All right. So the definition, as we all know, supply and demand set the price for the market, right? Supply is essentially what sellers want to sell for, right? Think of it as, and this is very rudimentary, think of it as the ask price. Demand is what buyers want to buy for. So think of it as a bid price. So to bring it into like a non-market real world example, think about if you're like on StockX and you're trying to buy sneakers or something like that, right? If you ever use StockX, you know that there's someone has a sneaker and their ask is, let's say, $300, right? So $300 is the ask. Now the bid you'll see is maybe, I don't know, someone's lowballing at 150, right? So between $300 and $150, that's a very wide spread, right? So and the only thing is, I think that would be, it really depends on how abundant, how many orders of people are selling that sneaker will really determine whether the buyer is going to have to come up in his price or the seller is going to have to come down in their price, right? So markets favor one or the other. Now, when you see things that are like at a very tight spread, tight bid asks, typically the market's very tight and it's very fluid, right? Such as when you're trading SPX or when you're trading SPY, those markets are extremely fluid and liquid, so you don't have to worry about there being too much of a spread, right? So, and usually like buyers and sellers will meet each other very quickly depending on level of motivation. So anyway, the supply and demand is, and think of it as that, like, whenever there was the tulip bubble of in the Netherlands of whatever year it was, they basically said that they set a price for the tulip and then they lowered the supply. And when you lower the supply on something that somebody wants, then it makes them be, they're willing to pay a little bit more for it. The perfect example is like houses in 2020, 2021, right? The supply of houses got very tight because people weren't living in these large cities because they can work from home. So they were moving and buying these houses and working in these houses and, constructing in their houses and and remodeling and things like that. So that market went really, really high because people realized that the demand for people to live, to work from home was increased. And, home builders are working extra overtime, but there's only so you can only build a house so fast, right? So I say that to say, basically, if the supply, and right now housing is a great example because the supply isn't as high as it can be, but the demand to buy homes is still quite high. And so the price rose rapidly over the past 2 years. We're in a weird place right now because the demand isn't meeting supply where it's at. So that means that guy was riding that gear, man. So that means that basically there is supply, but the supply is going to cost you this much. And buyers are like, no, I'm just not willing to pay that much. So that's what I mean by demand isn't willing to meet supply where it's at. they're demanding to buy, but they just don't want to buy it. They don't want to buy it at that price. So as supply increases, the value of an item drops, right? As supply increases, the value of an item drops. Let's say they flood the market with, if you ever watch what's that movie with Denzel, that Jay-Z did the entire soundtrack. If somebody knows, put it in the chat, or just go on that movie. American Gangster was yeah, the Blue Magic. So basically what they did, Frank Lucas, exactly. Thanks guys. You guys are gangsters, yo. So so basically what they did was they flooded the market. They got all of the supply, and they flooded the hood with the drugs, and they were able to, since they had so much supply and such abundance, they were able to bring the prices way down while still turning a profit. So when they flood the market with the supply, when there's product available pretty much on every corner that you go to, the price goes way down because competition is increased. So supply increases, the value drops, right? As demand for an item increases, so does the value. So let's say, it was the opposite, where only one person, a monopoly, for example, right? Let's say Microsoft with their Office 365 product. Nobody else has that. Nobody else really has that. I mean, Google, I think, comes the closest with their workplace product. And maybe there's some one-offs and some of these like Discord, Slack, for example, but O365 is the best complete product, I think, in that segment. And so they get to set the price, and that's why that segment in their business is always going to do well, because whatever price that they're at, buyers are going to meet them there because buyers want it. Same thing with AWS, right? There's no Amazon Web Services. There's not a lot of offerings in that particular market. So AWS captures most of the market share, right? So AWS, there's not a lot of people that are doing that. So they get to set the price, and people are going to pay it regardless because it's a good product. And the interesting thing about those things is that they're so scalable since they're cloud based. But anyway, I'm getting past the point. So as supply increases, the value of an item drops. As demand increases, the value increases. So supply has an inverse relationship, right? Supply has an inverse relationship. And this is a living document, guys. Has an inverse relationship with price. Demand has a direct relationship with price. And if you guys want to stop me or anything, just obviously unmute. So the easiest way to remember this, because, obviously when you're trading, you want to communicate your thoughts as quickly as possible. And if you see something approaching supply, you can sell. So what you want to do is say, hey, supply equals sell, right? Go ahead, Jay. You got something to say? Yeah. Somebody feels my pain. That's perfect. Yeah, I mean, and so when you can really break down the definition, forget about trading for a second. If you could just break down the definition of supply and demand for it to make sense to you, then So for example, the price of gas, and the price of gas is going crazy because the supply got choked up, right? Not only have supply chains globally been disrupted, but like the actual physical supply of gasoline and whatever it takes to get gasoline into the gas pump and into your car, all those, that not only has the actual physical commodity supply gone down, but also all the shit that it takes to get it to you has gotten more expensive. So supply, it's real world stuff. And so just really try to wrap your head around the most fundamental of, and however you might understand it, whether it's the gas example, the housing example, the StockX sneaker example, whatever it is, right? And if you guys want to chop it up, you can DM me, or we can talk a little bit more in the server about it. Because I really want you, once you can nail this down, a lot of things make sense, right? So the easiest way for me to remember is supply equals sell, right? Supply, sell, same word, simple, smooth, right? Supply, sell, supply, sell. And then let's say you want a product so bad, you demand to buy it. I demand to buy. And I don't know if there's anyone that has a better example of, how to remember buy equals demand. Go ahead and spit it out. But for this, supply, sell, and I demand to buy. And what that means is basically when I'm gonna let this ambulance pass and take a sip of my water. Oh, nice. Nice. Oh, he was on like third, just riding it for mad long. I was not hoping, man. I was expecting to hear a pop, but thank you. That's great. All right, cool. So I can continue through the mayhem. All right, so and this part here is very important. Supply equals sell. So when price reaches a supply zone, it's going to go down, right? When price reaches a demand zone, it's going to go up, right? So that's that. If anybody has any questions on this first part, the definition part, go ahead and shoot right now. Otherwise, we're gonna move on to the next section. All right, cool. So types of markets. There's like Sam and like all of us say, stocks go up, stocks go down, stocks go sideways, right? They don't just go up and down, they also go sideways. When stocks go sideways, the markets are in balance, right? That means that market participants are in agreement. They agree on price. So buyers and sellers both like the price here, exactly where it is. And what this looks like on a chart is just chop, or you see like those pennants or those wedges, things like that. That's when price is just going up and down in a range in a box, right? For example, it's the same thing. The market's in balance. And like we always say, when you see the prices in a box, don't trade it in the box. Unless you're gonna scalp it on the way up and down, don't trade it in that box. You want to let the price break the box in one direction or another, right? If it's in a wedge, you want to see it break and then continue the move. It broke and it's continuing in that direction. Same thing to whether upside or downside. So that's what we mean by let it break and then take the direction. Don't try to predict it, right? We've all seen double bottoms turn to triple tops, turn to 4 times support, turn to nothing for the rest of the day. So that's what we mean by taking it outside of the box. What this is like on a chart, choppy sideways price action with a tight range. This creates a massive area of liquidity. Now, a way to identify this liquidity on a chart is by using volume profile study, right? Volume profile. Now that's where volume point of control that J Hoss is always throwing out comes into favor. And I'm not going to get into that now, but the point of control is the highest area of volume within your chart. So that's where it's called point of control, because when price gets to that point, it's going to make a decision to go up or down very quickly because the decision's already been made in the past. So it's going to approach that area and then make the decision again, right? So that's a balanced market. Choppy, sideways action. Let me give you an example. A balanced market today was the perfect example of a balanced market for a while. Let's see. Like all of these boxes here, like this whole box. Actually, I'm just gonna go to the 30 minute. It's probably much better. Yeah, 30 minutes good. So like this range right here, this tight range where price couldn't decide where it wanted to go, right? From pretty much from there to around here, right? You see that it's just up and down within that range, and it's just painful. Super painful, right? And then it finally makes a decision and comes out, right? So this is the balance when price is consolidated and not moving too much. And if I were to move these candles, if I were to do this, then you would see a little bit more movement. And if I were to bring this down into like smaller time frames, you see more movement. But if you zoom out and you see price for what it is, you'll see that this is just a strong area of consolidation on ES 30 minute. So that's a balanced market. Now, balanced markets lead to imbalanced markets. Imbalanced markets are when market participants do not agree on a price. Either buyers and sellers are in full control here. You can easily tell who, because the price is moving strongly in their favor. This move creates illiquidity. So what that looks like is now we have balance here. Buyers and sellers are agreeing. They're shaking hands. They love the price here. And then all of a sudden, sellers say, you know what, now take it lower. And they sell more aggressively. You see a bunch of sell orders getting filled very, very aggressively, working its way down. This is the perfect example right here, because you have an area of balance leading to an area of imbalance, right? So now price worked its way down strong all the way down here. Actually, let me just turn this off. Yeah, okay, cool. So we have an area of balance leading to an area of imbalance. The imbalance is to the sell side. right? So to the sell side here, which means it created an imbalance and went down hard, really hard, right? There's another little mini zone here, but I'm gonna ignore that one for now. And then from an area of balance, we went down through an area of imbalance into another area of balance, right? We found balance over here. And I'll show you, I'll get into that in a second. So we have types of markets: balance versus imbalance. Balance leads to imbalance. It's like you always hear me say, range contraction leads to range expansion. So what that looks like is, and I wish I could save this. I'm just gonna open a new trading view. What that looks like is, I think X was doing it on the daily. Yeah, so X was doing it on the daily. So, and now I'll put my Strata system back on. So now we have a big 3 bar, which is a range bigger than, on the upside and downside, bigger than this 2 bar. So let me go ahead and draw it real quick, and I want to get through this as fast as possible. So that's your high and your low of that day, right? This day, the price went below the low and above the high, so the range expanded in both directions, right? The next day, so let me just go ahead and set the lines. Let me just move these lines. So you constantly see me talk about range, and S trades inside bars all day and night, right? So you got a big bar, and then you got the range of the next day. The high was below the previous high, and the low was higher than the previous low. So if we look at it on like a 30-minute, right? This is that day where we had that high, and we had this low, right? This low right here. Now, that's whatever day that was, right? And then the next day, oh, hold on. Here we are. Okay, so this is the next day. This is one day, this is the next day, right? The 22nd and the 25th. The 25th, the high didn't break the high of this previous day, and the low didn't break the low of this previous day. So it was an inside day. The next day was an inside day of this day, right? So let me just draw the high and low of this day. The next day, price stayed within the highs and lows of the day right before it. So we had range getting smaller and smaller, as you can tell by these rising support and falling resistance lines. The range is getting smaller and smaller and smaller until on this day we broke out of it in the pre-market a little bit, and that must have been a sign, right? And let me turn my Strata system off so we can see which direction price went. Price opened up above the high of the previous day, right? So this price opened up above this high, came all the way down, right? Came all the way down. It caught a bid and actually formed a zone, right? Now, you guys have heard me ranting for the past 16 minutes or 18 minutes or whatever. Somebody in the chat in study hall, tell me what zone is this? Take a guess. You don't have to be right because we haven't talked about it yet. But it came down and it based and then it boogied. So, and this is a zone right here. So somebody tell me what zone this is. Go ahead and throw it in study hall, or you can unmute yourself. That is correct. This is the demand zone. This is who was that? No, TechLux, yeah, of course. So if anybody ever wants a one-on-one on supply and demand, go ahead and hit up TechLux because she got it. I think she fully has it. And if she has time, we'll have her chop it up a little bit with us. And I'm putting pressure on her. She just, if anybody wants to throw some charts back and forth, practice with her because she's been practicing. That's what I mean by that. It's a joke. So inside day here on the 25th. Further inside on the 26th, and then range came and actually expanded and broke out. It broke out above this day, and above this day, right? And so going back to the daily, what that looks like is it looks like this, right? It looks like range contraction equals range expansion. Balance, right? The buyers and sellers are stuck between 2081 and or 2083 and 1963 on this day, and then they're like, all right, let's bring it. We could bring it a little bit closer down. The seller said, let's bring it further down. And the buyer said, all right, you can come further down, but we'll go further up. And they did the same thing the next day. And then today, buyers had enough, and they took control. People liked it at this price. Maybe they got a sneak peek of what's going to happen on earnings tomorrow, but they liked it at this price a lot and they just bought it like crazy, and then it expanded. So going back to supply and demand, and I'll leave this up, and I'm actually going to go back to 30, and then I'll go back to the lesson real quick. This is a really good example. I didn't have, full disclosure, I didn't have any examples of this. I'm just going to freestyle this whole, when it comes to charts. So if you guys don't agree, you can call me out and we all learn together. So balance leads to imbalance. When prices balance, buyers and sellers are happy. When the market's balanced, when the market balance moves in favor of buyers and sellers, creating an imbalance, you see the strong move out. So in the example for X, the balance favored the buyer, the imbalance favored the buyers, right? There was a big flush, and then there was an area of indecision, and then, or another area of balance right here between these two candles, between basically, this tweezer bottom, these two wicks, this area of balance here. And then buyers took control and formed a balance to the buy side, imbalance to the buy side, where price rapidly rose. So, okay. When supply is greater than demand, price moves rapidly in which direction? Somebody tell me, not Tech Lux, because I know she got it. You can unmute, or you can write it in study hall. And I'm not going to continue until somebody jumps in. If you have more supply than demand, then the price goes down. That is correct. That's correct. And so, by process of elimination was this one. And just somebody say it so I can move on. Thank you. Thank you. You're no longer a bot. Now you're just a J Mitch. That's interesting. All right, cool. So yeah, you guys got it. When supply is greater than demand, price moves rapidly down. Think of whatever, the tulips, right? They went down. Go research the tulips. And when demand is greater than supply, price moves rapidly up because people want to buy it. Tulip craze in Holland in the mid 1600s. You can see the price of tulips, how it rose because demand increased. Demand was greater than supply, and then they realized what the hell they were doing, and then just tanked, right? So same thing with NFTs. So when these rapid moves out of these zones of balance occur, sometimes the move happens so quickly, and this is the actionable part, right? Sometimes the move happens so quickly that there's still some order sitting there. So I want you guys to know that we're not trading, we're not moving markets, right? We are trading alongside the backs of whales, right? The whales decide where the price goes today. And what we try to do as traders is we try to identify patterns that will help us to identify where the price potentially might go. Always potentially. Really, it's always a gamble. There's no such thing as a sure bet. For some reason, Jay's a little bit dialed in, and from what I'm hearing from Frank is very dialed in, and they just kind of know which direction these things are going to go. But but at the end of the day, we are small fish. We are barnacles riding on the backs of whales, hoping to catch some food, right? And so that's a very important point, because when these rapid moves out of the zones of balance occur, sometimes the move happens so quickly that there's still some unfilled orders sitting there. Let's go to X. So right here, this move seemed to happen so quickly that there's some institutional traders, right? There's some big fish that whatever the catalyst is, or whatever the reason is for this to move from here up, a bunch of orders got filled here. And this moved so fast that it left some of these orders unfilled. There's some unfilled orders here, right? And so there being unfilled orders here, and I'm not sure, but maybe there's a way using level 2 data to identify large lots of orders that are just kind of chilling there, right? And so what happens is, and one more thing I'll say, I'll get back to it. I don't want to jump ahead. So this moves so quickly that there's 10,000 orders that are not filled yet, buy orders, right? And not buy orders by you and I who are manually moving our 2 and 3 and 5 and 10 contracts up and down the price ladder, but orders that, algorithmic, I want to buy 1 million shares at this price, something that can actually move the stock, right? Something like 1 million shares will actually move the stock. And out of those 1 million shares, only 500,000 get filled. So there's 500,000 shares chilling here, waiting for the price to come back down to automatically fill. Frank says Bookmap may show the orders, but it does fluctuate, and also you can be spoofed sometimes. Yeah, you know, so that's the tool that if you're interested, check out Bookmap. Bookmap is like also really, I mean, from what I've seen, it's very, very difficult to kind of translate into actual life ideas. And I just haven't, I might have looked at it for 5 seconds and then said fuck this, right? So full disclosure, but I heard it's a great tool. So let's say you have a million, somebody a whale put in an order for $1 million, and then you have 500K unfilled orders here, right? They only got filled for half. What do you think is going to happen? And I'm not going to kill you guys with this, but what do you think is going to happen when price comes back down here? You know, what happens when you set an order and you set a buy, and you want to be patient, and you set your limit, and you say, I'm only going to buy this contract at this price, and it gaps up a little bit, it goes up 10-20%, right? And then you're like, all right, whatever, it left me. And you go and look at something else, or maybe you walk away and you come back and you were filled when price came back down to it, and maybe you're getting filled and it moved to the downside, and it's killing you a little bit. That's what happens when these unfilled orders are sitting here. Price comes back down, and as it approaches this level, boom, another order gets filled, and it comes down, and then boom, another order gets filled, and orders keep getting filled, right? So that's the action. When these prices rapidly move out of the zones of balance, sometimes the move happens so quick there's some unfilled orders. When price comes back to these areas, a repeated reaction is expected once the unfilled orders get filled. So when price comes back down to a demand zone, you can expect the price to move up. When price comes up to a supply zone, you can expect price to move down. Now, I'm looking at this, and this might not be a real supply zone, but I'm just gonna go ahead and draw one right here. I'm gonna draw one right here, right? Because I saw that there was some indecision over here, and then price rapidly moved down from that area. It came back, some orders got filled, and then price, and even here, and then came back and moved down. Here, moved down, here, moved down, right? Now, and this might not be a proper demand, a supply zone. And just because this might not be real basing here, you know, if I throw on a volume profile, maybe there's a shelf here, maybe not. Let me throw one on and see, you know. And so it's important. Yeah, I mean, there's no real shelf. I mean, there's this here, so that's something, right? But maybe not. You want to see a lot of volume in areas of supply and demand. So I know like S uses, he can eyeball supply and demand by using volume profile, and or even just looking at the price action. Like you could just eyeball it, right? So this might not be a real zone. I think this one is. I don't think this one, I'm not 100% convinced on it. But what I like about this as an example is we got 500,000 unfilled orders as price moves down, right? Unfilled sell orders. Price comes back to that area, and boom, 10,000 are filled. Another 10,000 are filled. Another 10,000 are filled. Another 40, you know, whatever, 350,000 are filled. And now another 10,000, 30,000, the last 20,000. And then all of a sudden there's no more sell side imbalance. There's no more sell order sitting here. So now price can do this. So that's why it's important to, and I think this is probably not the strongest example, but it's an example, and I think it's good for you guys to understand what happens once price goes back to the zone. What's it gonna do? It's gonna reject. It's gonna reject. It's gonna reject. It's gonna reject a little bit, and it's gonna reject as much as it can, as much as you know. It's gonna reject as many orders as there are, pretty much, right? So when supply zones get approached, price usually drops, as it did in the example for X. When demand gets approached, price usually rises, right? So the next, and if you guys have any questions, go ahead and jump in. Otherwise, I'm gonna keep going. The next section: how to spot supply and demand zones. You want to look for areas where the market consolidates, followed by a rapid move in one direction or another. So somebody give me a ticker real quick, so we can just try looking for it on another chart. I might throw out a ticker. ABBV. Don't they have earnings this week? ABBV. Okay. Let's see. I think they have earnings this week. Yeah, they have earnings on the 29th. So, okay, this is a good example. So, what the hell is this? What is this big gray box? Big shaded box. I don't know. Anyway, so this is a very good example of supply and demand, in my opinion. So now I'm looking at this rapid move up. We have 1, 2, 3, 4, 5, 6, 7. 7, and then even this candle of higher highs, right? So I'm gonna go into my 4 so just by looking at this, I can tell that there's an area there was strong demand in this level down here somewhere that made the price go way up, right? Now I can see that there's a bunch of volume in that area, and you can even tell by all of the basing, all of the kind of choppy sideways action that it did on these 4 days before it made the big move up, right? Let me look at this on the weekly real quick. Yeah. Oh, and here's another one. Here's a great example, right? There's another great example, in my opinion, and it might be, and this is me just doing it fast and dirty. Obviously, you want to hone in a little bit and get a little bit more granular with it. Here's an example of supply. There's an example of supply. This is a great example. Let me just make sure I'm not missing anything. How to spot. Okay, so you want to look for areas where market is consolidating, followed by a rapid move in one direction or another, right? Market consolidates here on this candlestick on that week. Let's go to the daily so we can see the consolidation a little bit better, right? Here. Okay. You can see the market consolidating there, right? Going sideways, 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 and then boom, massive flush. Massive flush. Now, so we have the sideways price action, right? We have the basing, and then we have the move. How do I know? So now I have the basing, the consolidation, the move, big rapid move. Now you are just like a support and resistance. When you have support, when you draw a support line or a resistance line, you use 2 points, right? Point A and point B, to draw your support, right? Or your resistance. And then when you get to, at that point, it's just 2 points creating a line. When price comes back to meet that line, and then it reacts in the way that you expected it, right? So let's say it's support. When price comes back to support and it bounces and it reacts the same way that you expected it to react, now your support level is valid, right? Now your resistance level is valid because it reacted the same way you expected it to. So same thing applies here. We have 2 of the 3 points, let's call them. Point 1, consolidation, basing, indecision, balance, right? Point 2, massive move in one direction. Big move to the downside. The third point would be the retest. Now, I would venture to say that this supply zone actually looks like this. And what I did was I covered the entire, and usually I don't do it this way. I'll show you how I draw them, but what I did was I covered this entire candlestick here. And we had the consolidation, big move, and then we had the retest over here, where price rejected and seller stepped in because there was a bunch of sell orders sitting there. Seller stepped in, right? And then over here you had some fight between buyers and sellers, but the imbalance was still very strong to the sell side, so it rejected a little bit more. Even on this day when it came back up, price came up, and a bunch of sellers stepped in and brought it all the way back down, right? People who bought it here took profit here. People who bought it here took profit here, right? So there was just a bunch of sell action on that candlestick. By the time you got over here, a little bit of sellers were left, but most of them were done. I think most of them got out on this day. And even on this day, you see the volume on those 2 days is pretty high compared to the previous 3 days, right? Volume on these 2 days higher than these 3 days, right? So by the time we got here, maybe there's no more sell orders. No more sell orders. All the orders are done. And then we kind of moved up from there, right? Now I'm going to keep this chart open, and I want to make sure I'm not missing any points. So we don't predict the zones. We let the zones form, right? So what zone forming is consolidation, however you want to call it, consolidation, agreement, balance, right? Whatever that is, whatever you want to call it. And then a massive move. Now a zone has formed out of that consolidation. The massive move is your first hint that there's a zone, right? The massive move is your first hint. Right. So we let the zones form. We always say you should take the trade out of the box, up or down, right? Don't trade it in the box. Let it break. Right now, in supply and demand, when you see a price approach a previous consolidation into imbalance level, you can assume you will get the repeat move once the price enters back in the zone. So let it form, you'll see the basing, and whenever you see like some crazy sideways action in price, you'll see me in the server say, oh, it looks like a new zone is being formed, right? If it's a dramatic consolidation, I'll say there's a zone being formed. Let's see which way it goes. This one happened to be a supply zone. So that's the first point, consolidation, then you got the first move, and then you got the validation on the retest here, 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 and even a little bit here. 4 days where price moved down from this area, right? Until all the supply orders got, all the sell orders got eaten up, and there's no more sell orders sitting there. So what you want to look for, rally, base, rally, right? Which is big move up, sideways, choppy movement, big move up, right? Or like, for example, a 3-bar play. A 3-bar play would be a rally, base, rally, or so you have that. You have rally, base, drop. So big move up, price hits a ceiling, and it doesn't just fall hard, but it kind of does it forms a little bit of indecision and kind of chops around in the area for a bit and then drops hard, right? Then you have drop, base, drop, which is basically just a 3-bar play to the downside. Big bar, consolidation, big bar going down. And then the last one you have is a drop, base, rally. So big move down, consolidation, sideways action for a bit, and then big move up. So, and the one thing that you're really looking for out of all of these is the base and then the big move on the other side of it. The base and the big move on the other side of it. That's what you want. That's what you want. So it'll make your learning curve a little bit, a little faster. So we have a little supply zone here where we had that base, big move, right? This happened to be not really a rally, base, rally. I mean, maybe you can call these, this little price action here a rally, but we have the base and then the drop. Over here, let me go into a little bit further into the actually over here, this is a good example too. So I started these on the weekly, and then I zoomed into the daily. You got to do it, and I'll touch on this, but you got to do it pretty much at every time frame. There's a little bit of a demand zone here, because you see that how it based, it kind of went sideways for these few days here, and then it made a rapid move out of this, right? So there's another demand zone right there. ABBV is such a great example. There was a long time of indecision here, 2 weeks it looks like. Go back to the weekly. Where the hell, where is price? Where are we? Yeah, we had 4 weeks of indecision, of chop, a range, and this is interesting. We also have kind of a broadening formation that formed on ABBV, kind of, right? Kind of. But anyway, chop and then big move, right? And then over here, big move down. So when you see something like this, where we hit a wall, exhaustion, and then massive Matumbo smackdown all the way down 3 weeks in a row, I bet you there's a supply zone at the top of this. Yeah, yep. I would call this a supply zone, because what you're looking for is the bodies are pretty much at the same area on one side. On this side, it's on the top. On a demand zone is at the bottom, right? I would say this is a potential demand zone. This is definitely a demand zone here. Right. So when you're drawing these, you got to go in and out all the time. Right. And sometimes they'll show up on a weekly, and they won't, they'll show up on a daily, but they won't show up on like a 4 hour or 2 hour or a 1 hour. Right. You got the basing and you got the massive move up. Let's go into this. This is a daily. Let's go into this on a 4 hour and see if we can find where it actually based. Yeah. Right here. Right there. So, and it's important to find, and maybe it's this, maybe it's that, but I would call it this right here. And what I say by this, I mean, maybe it's where the bodies are here, right? And then it broke out, and then it came back and retested it. So you see where the bodies are here, right here, broke out, and then seller stepped in, it retested the demand zone and then broke out crazy out of that demand zone. So so that's definitely I would call this 100% a demand zone based on this price that I'm seeing here. And I'm just going to bring it down. And this is something that takes a lot of time, right? You got your basing here. Let me just hide this one for a second. Hide. You got your basing here, and then you got price moving rapidly out of it. So let me go into a smaller time frame so we can see the movement, right? So you have your basing here where it just goes sideways a bunch, right? And then price kind of jumps out. Price kind of jumps out of it, and it comes back down into it, jumps out of it, consolidates, right? And then from here kind of tests it again and then moves out. Now, one can argue that there's another demand zone in here, you know, and it really depends on how granular you want to get. But this is it. I mean, it's just sideways and then big move out. That's all you got to look for. Sideways and big move out. And you can even forget the first part because it doesn't matter. It kind of matters because like a rally-based rally means big, strong upside. A drop-based drop means big, strong downside. And then these rally-based drop or drop-based rally just mean reversals, which some people just don't like trading reversals, right? So you just got to keep that in mind. That's really all the difference, but that's all the difference. But what you want to look for really is, and if you're playing full time frame continuity, like strat play, then these are the ones that you want to play. These are the ones that really are the gold, right? These are the ones that are gold because these keep you in full time frame continuity, right? Because as price is moving in whatever direction it's moving, and then it slows down for a little bit and then it continues. That keeps you in full time frame continuity, which is, as we know, if you study strat, it produces very strong moves. So let me see. I'm just looking through. I see nothing in the chat. Okay. So just like support, and I'm just going to reiterate this, just like support and resistance lines, you draw point A and B, the third tap, the third time, you know, A, B, and then the C, the third time that price comes back to that level or line and reacts and validates your support or resistance line. Supply and demand is the same thing. So you get your base, you get your move, whether a rally or a drop, you know, up or down. And then the retest is what validates the zone. The retest is what validates the zone. Now, the only thing is you shouldn't get in at the retest, right? You shouldn't get in. Let's go to X. You shouldn't get in. Well, X doesn't have a retest yet. Let's go back to the 1 day. Let's go back to the 1 day and let's go to here. Right. I wouldn't necessarily get in here on this day. I would wait for it to sell, wait for the sellers to step in and then get in, right? Like, and it depends on your risk tolerance. If you're very risky, you can get in a little bit earlier and maybe, you know, risk being wrong. It depends on how much profits you're playing with also. If you're playing with purely profits, then, you know, you're much more risky. This is a good day. This is a great day because now not only have you touched a previous level where we've based and fell out of, and now you have the continuation, but you also have an outside day to the downside, right? If you're playing strat, that's a range break to the downside. So you can swing from here, you know, you can swing into support wherever your support is, which happens to be at 115.07 or 115.03. So you have to, and this is another strategy you take and combine it with other things that work for you. Whether you play with moving averages, VWAP, support and resistance, anchored VWAPs, you know, flow, whatever the case is, just this is something that you use to kind of build your case, and always know kind of where these things are at, because you don't want to. We've all got caught, and especially me, I'll be the first to admit it. I've got caught buying calls into a supply zone, you know, buying calls pretty much right here, and then it goes into the supply and it immediately rejects. Like, you know, so you have to it does take a little bit of time in order to you know, take the extra 30 minutes to look through your charts and add these supply and demand zones. But what that does is it forces you to look at less charts and focus more, right? So if there's some tickers that, you know, like if you look at your P&L for the year and there's some, or your journal, and there's some tickers that you've played that that you have a good hit rate with, maybe you should draw supply and demand on them and keep it on them, right? And always know, and because they're the one that constantly pay you, so why not get to, build a better relationship with them, get to know them better, spend that extra time drawing supply and demand on them, right? So it does take time, and Tech Lux Lover will tell you, but it is worth it. And Tech Lux, if there's any time you want to, at any point you want to jump in and you want me to stop talking, just jump in, no worries. Otherwise, I'm just going to keep going. This other part of it is very fast. So when drawing out your supply and demand time frames now, when drawing out your supply and demand zones, you want to start out on the highest time frame possible and work your way down, right? So with ABBV, we started on the weekly, right? And we discovered this zone up here on the weekly. We discovered this zone over here on the weekly, right? And then you work your way down, meaning you go into the daily and then you kind of fine tune it. You might want to move some of these lines up and down depending on what you see, right? Then you go into the 4 hour, and then from there you can kind of see, oh, okay, this isn't as big as I thought it was. Let me go ahead and bring it up to where it actually is, right? And then even further, you go into the 15-minute and you just fine tune. And if you were on our homework on our study hall from last week, which is recorded, and you can find the recording in the study hall channel or on our YouTube, then you will, then I gave you some tips on how to distinguish between a 15-minute demand and a 30-minute demand and a 1-day demand and so whatever that is for you, go ahead and use that. What I find when I first started drawing supply and demand, I would do this. I would do so for example, this is a demand zone. I would draw with a green background, knowing that whenever price reaches this point, it might bounce and go up from there, right? Based on the buy orders that are sitting here. And then I would, if this is what did we say? This was a 1 hour? No, 4 hour. And you see me, I'm looking for the basing right now. Yeah, a 4 hour. This is a 4 hour demand zone. So what I would do is I would go ahead and hit the ray and just draw top of the zone. I'll put this in green. And Tech Lux, this is the way that this is how I do it. I put that in green. I put the top of the zone in dashed line. I put the bottom of the zone in a hard line, and then I'll label it here on the top of the zone where the reaction is gonna expected to occur. I'll go ahead and put 4 hour demand, or you can put 4 hour buy imbalance, right? Or you can put 4 hour buy side. Right, whatever makes more sense for you, right? So when I see that, now when I'm trading and I'm on the 1 minute chart, right? If price comes back down to test that level, right? And I'm on the 1 minute, all I gotta do is look over to the right. First of all, I see that there's a zone here, a supply and demand zone, because I see the dashed line with the hard line. That's just what works for me. And then I see that I wrote some notes here. Oh, this is a 4 hour demand. Okay, cool. Say less, right? How that worked? They're playing Biggie on my block, and the ice cream truck selling ice cream at 9:22 at night. So how this works is, let's say this level right here at 138.35. Let's say this is a support level, and prices around here, and it breaks support. Somebody would say, "Oh, ABBV just broke support." Right? Meanwhile, the bot is calling for ABBV 150 calls. But we're looking at it and we say, yo, this just broke support. How are you calling 150 calls? Because there's a supply zone, there's a demand zone here. It's fucking loud over here, guys. Sorry for the language. Yeah, one guy's playing Biggie. There's like 5 motorcycles and ambulance just passed by. If you guys don't hear any of this, then technology is amazing, guys. I have a Blue Yeti, and if they're public, then maybe we should think about. Wow, you don't hear nothing. That's crazy. Yo, Frank, it's loud, bro. All right, so they're all gone. They're all gone. Yeah, it's definitely summertime. So if this support breaks, I'm not gonna buy puts because I know that we're in supply right here, and there's a potential for price to rise from this area, right? So maybe I have no setup. Maybe I have no setup here, right? They're public, great. We should look into them because this shit works. So that's that. Let me see if I missed anything on that portion. So you draw your time frame, start from the highest to lowest, weekly, daily, 4 hour, 3 hour, 2 hour, 1 hour, 65-minute candle. It started. You know, and just go down. I just wouldn't go anything below 15-minute, right? The higher time frame zones are more valid in my opinion. That's straight opinion. That's straight opinion. Like this ABBV weekly, this joint here, this is valid to me because we had 2 weeks of sellers testing the water and getting sold off a little bit, right? If I pull into the daily, we had 3 days, 3 days, 1, 2, 3 days of rejection. These 3 days here. Let me zoom into it. Right, we had 3 days of rejection off of a weekly supply zone. So you know, so to me, I think that they're very valid. The larger time frames are valid, right? But if you don't see it that way, you don't see it that way, and that's fine. You might not see the zones on some of the time frames, so it's important to zoom in and out until you see that basing price action. So when you saw me looking for ABBV on the 4 hour and that most recent one that we're at, which is here, right? Like there's obviously a big move coming out of this, but I wanted to see exactly where it was. I wanted to see the strength of it, right? If it was the 1 day, this is the 1 day. If it was the 4 hour, then that means something, right? If it was a 2 hour, then that means a little bit less. If it was a 30-minute, that means just a little bit less. But this was a 4 hour, price moved up, came back down, caught a bid and ran it, right? So 4 hours are pretty strong, and 4 hours are good to find. 4 hours are great time frames to find 3-bar plays. So rally, base, rally. And by proxy, that 3-bar play is going to give you, that base is going to give you supply or demand depending on where you are. So, you know, so that's really 4 hours probably a really, really good time frame to identify some of these. Let's see. And I usually don't go above a week or below 15 minutes. The reason why is because, you know, let's do Tesla. And shout out to anyone that made money on Tesla today. Tesla 1 month. You know, I can use this here probably. You know, this here. The basing between these two candlesticks with all the buyers stepping in with the rapid move up looks like a clear supply zone, demand zone to me. But then if I were going to go to the weekly, I would see that, you know, and then so now if I go to the weekly, I have to lower this, I have to adjust this zone anyway, right? To look more like, it looks more like, I would say like that, or even like this. Right? So I have to adjust the top and bottoms anyway. And if I'm on a monthly and my zone looks like this, I'm just gonna leave that zone and I'm gonna make a new one. If I'm on the monthly and my zone looks like, you know, let's say my zone looks like this. Let's say this is my zone. When I'm on a daily, when I'm on a 5 minute, I'm inside of, and let me get rid of this risk reward thing for a second. I'm just inside of a zone. Like, what's gonna happen in this zone? I'm gonna think that it's just gonna go up the whole time. And I mean, it's been going down, it's been going sideways, it's been going up. So that's why I don't like monthly, right? Weekly makes more sense to me personally, to at least start to identify them. And then, and really like daily is like where the sauce is at. Daily is where you really want to start. Daily is where you really want to start. Like, for example, like I would even just call this right there, boom. That's my demand zone. And I'm not even gonna get crazy and try to dial it down even further. That's my demand zone. The reason why I say this is my demand zone is because we had the basing on these 2 days. Let me zoom in a little bit. We had the basing on these 2 days, right? And then I can draw a little bit better than that. Let's do it like that, just to cover. I just want to cover some of this area, some of this wick here. Really, it should be like this. So we had the basing, sideways action, and then big move out. It came back down and it tested it, big move out, came back down, tested it, big move out, came back down, tested it, big move out. And then there's probably another supply zone, demand zone over here somewhere based on the way this thing moved out of that, right? So that's what you got to do. You got to kind of step out and zoom in and zoom out but don't go too far, because then you have, if I were to go into my 5 minute today now, let me get rid of this big ass monthly behemoth. And now I can actually trade without having a bias, right? Because that zone that I was trading in is down here. If I'm on a 5 minutes and price comes back down to that area, like it did kind of on this day, price approached it on that day, and I mean didn't touch it, but it came down to the area, and like I see that there's a demand here, and I can take that into account in my trading, and I'm not clouded by my whole screen is filled with a green zone or a red zone. That's why I like this, you know, the weekly, and really the daily is probably the best. And below 15 minutes, I mean, if something bases for 15 minutes, let's say the 15-minute time frame, for example, like X is a 30-minute time frame, 30 minutes of basing here, this price action here, that was 30 minutes of indecision leading into a big move. If this was like two 5-minute candles, they took 10 minutes to agree on price and they moved out like 10 minutes. Like that's not real balance. Buyers were probably having their coffee, sellers were on lunch. That's not real balance, right? 30 minutes is a little bit more valid, you know. And if I were to zoom in on this, I'm just curious. Yeah, I mean that's still valid, I think. And then 5 minutes, the 5 minute you're probably not even gonna see what. Yeah, I mean 5 minutes just looks like a double bottom, but you know 30 minutes is where the true imbalance is. And so now this is here. I'm gonna go ahead and color this. Right, I'm gonna color it. I'm going to draw my rays on it. I got that one. That's a dashed. Oops. That's a dashed. This should be a solid. It could be whatever you want. For you, whatever you want. What I know is if I approach it from the bottom, it'll be at the bottom of a demand zone, right? It's just, you know, from my own knowledge. And then I'll go ahead here and I'll label this line. Let me get rid of this. Get rid of this volume profile. Right. I'll go ahead and double click my line, label my line, 30 minute demand. That's it. Right. And now I'm going to leave this here, and I won't know whether it's real or not until price comes back to this demand and I see some buyers step in, and then it kind of jumps out of this. It comes and it kind of jumps hard out of this area. So I'll just leave it there. It might be wrong, it might be right. And that's another thing. We don't know if it's a real zone or not until it comes back and does this, right? Buyers step in every time it comes back to the area, and then you get that massive move up. Oh, this is support. That's not what I wanted. This is what I wanted. You know, the basing, and then buyers every time it approaches, you get big green moves, big sticks out of that area. So this is a real true demand zone. For Tesla, let me see. Validity. And does anybody have any questions about how can you tell when orders go unfilled? I think it's so Frank mentioned Bookmap is a tool that might show the orders. I think that level 2 might show some orders sitting there as well. I think if you use like Active Trader, there's some volume there. If you use volume profile, such as this study here, which shows the volume traded on the price axis here versus the time axis, right? Volume. And then you see these big nodes, these big areas where where volume extends out. Typically these have, you know, when there's a bunch of kind of sideways action and then you see the big move, typically you'll find that some of these orders that are sitting here just weren't filled. It's kind of an assumption. The way to verify it is to use Bookmap, use level 2, and let price come back down to it to see that there's some orders sitting there still, right? This shows me that there was some orders still sitting here because price approached it and they bought it. Same thing on this day, right? So it's really an assumption, and really the way that you can tell is by how rapidly price moves out of the area of balance and forms an imbalance. In this case, to the buy side, right? Buyers imbalance and bought it up. I'm sure there's ways to verify it, but I think it's really more than anything. I think it's just you're operating under the assumption that because of the big move, there's some people that are still left there. Have to be, right? Like if you watch Sam, Smarter Trader, sometimes he posts some of his P&L, and he'll mention that he has to place large, like massive quantities of orders of contracts, and they don't all get filled at the same time. So like those sweeps, sometimes those sweeps are Sam because he's just not getting all filled at the same time. And because some of these brokers don't have all of, you know, whatever, however it works, they just don't have the market for it. And so sometimes he wants 100K contracts and they only sell him 60K, and that other 40 is just gonna sit there and chill there, you know. And Sam might be small time, but the banks who order the same way, they might just say, just leave the order there, fuck it, that's gonna be the floor, leave it there. So, and that's the assumption that just the money's so big that they don't care to manage it the way that how we manage our pennies, right? They're managing GDPs and we're managing our rent, right? So and if anybody has anything they want to answer J Mitch, I know that was like kind of a terrible answer, but that's what I got for you, bro. So validity. The more recently the zone was formed, the more valid the zone is, right? The more instances that price comes back to that level, the more orders are filled and the weaker or less valid the zone becomes. Let's go back to ABBV. ABBV on the weekly imbalance here, the weekly sell side imbalance, weekly supply zone, hard flush, and then some of the orders were filled here, some here, most of them look like they were filled here, and then from there there's no more orders because these people probably brought their order down, they're filled down, they're like fuck it, just take it down, and then from there it kind of gapped out of this zone. And also, now that I'm looking at it, I'm gonna go ahead and draw this. I'm gonna draw this here. Just gonna draw that there. And can I extend this? Let me see if I can extend this. Settings, style, extend to the right. Perfect. This is a basing and then a massive move out of that base, right? So this is a demand zone. This is a supply zone, and this looks like it might be a demand zone right underneath the supply zone, right? Price hasn't come back to that area yet to confirm it. So if it ever does, then I'll have my zone ready there. So the more recently it was formed, the more valid. The more times that price enters and moves down off of supply or moves up off of demand, the less strong that zone becomes. And the more time it took for the zone to form, the stronger and more valid that zone is. For example, this ABBV weekly supply zone here, this weekly supply zone here, to me, is more valid than this X 30-minute demand zone, right? Because that was a week of buyers and sellers deciding which direction they're going to take it in versus 30 minutes. So let's talk about support and resistance. Support and resistance, they're not the same. They're not, and this was something that I had to wrap my head around a lot, you know, and take some time and think about and draw and see in real life before I can understand it. So they're not the same. Support and resistance and supply and demand are not the same. Resistance isn't demand. Supply isn't support. Resistance isn't supply. Demand isn't support. Sometimes they can be, right? The difference is you need to see the balance occur. Like sometimes you might just see a little bounce and no balance. A little bounce, such as somebody give me a chart. Let's look at a different chart. Don't be shy. Whatever bag you holding, just post it in the chat and we'll look at it. Starbucks. Thank you. Starbucks with the broadening formation. Okay, so Starbucks has, this looks like a resistance level to me, right? This is a resistance level to me. So I'm gonna go ahead, you know, maybe I draw my resistances using a 2-weight solid line, right? So that's my resistance level. Whatever your legend dictates. So boom, price came up here, rejected, rejected, became support, resistance, 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 resistance. This here actually this is an example of potentially an area where resistance and demand and supply are the same, right? Potentially, and that's because we had that basing on the weeks, and this is a weekly time frame. So we had the week basing and then fell out of there, right? And then on the same token, let me just go ahead and draw support. I would say this is a level of support right there, right? It formed and then it bounced there, right? So let's go to the daily. Let's go to the daily. Now I have my support line, right? And there's no imbalance here. I don't see consolidation. I just see like a down day, an up day, right? Over here, I start seeing dojis, and I start seeing wicks, and I start seeing things that tell me that there's potential indecision here, right? So now I would go ahead and draw this. I would go ahead and draw like this. That would be my demand, my supply zone. Now, it just so happened that in this particular instance, the supply zone was at the resistance. There was a resistance at the supply zone, right? We have the resistance here, resistance, and then indecision, and then boom, massive move down. This, I'm gonna actually draw it like this, and then the way that you want to draw it, I guess we'll get to that. We'll get to that after, but the way you want to, so the way you want to draw it is you want to go from the top wick to the bottom of the body if it's on top, and if it's on the bottom, such as like this one down here, you want to go from the top of the body to the bottom of that wick right there. So you want to cover the wick of one candle and the body of the other candle, pretty much. And it takes practice. This is how most people draw it. You know, wick and body, bottom of the wick, bottom of the body, top of the wick, top of the body, bottom of the wick. Just to cover as much ground as possible, right? But Starbucks is a good example. You know, we have this one just so happen to be form a supply zone at resistance, right? There is a support here. I guess I have my line drawn. This might be a fib, actually. No, this is a previous support level. And this actually might be now that I'm looking at it, this actually might be a demand zone way over here, right? Because price came up. So you see the two candles where let me just zoom into it so you can see a little bit more clearly. So you see the two candles where it kind of went sideways between these 2 days, and then moved up, came down, gapped, and then from there worked its way up. I think that this is probably too choppy and sideways and you know, not as abrupt and direct of a move as, for example, this one here, where we get 1, 2, 3, 4, 5, 6 days of higher highs out of this move, or where we get, you know, I don't know, 2 months, 3 months of just downside coming out of this hard ass demand zone, supply zone here, right? So I wouldn't call that this support level when it first formed way back here. I wouldn't call that a demand, only because we would get much more rapid move, right? Same thing over here. I mean, this is a good supply. This is a good demand zone. This is a good supply zone because the move is strong out of it. You know, 4 or 5 candlesticks that are higher or lower, that'll validate your supply and demand. You know, even over here, this day, right? What day was this? Let me mark it. And then I have like one more thing, and then I think we're done. I'm gonna mark that. I'm gonna go into the 4 hour. Yeah, I would call this and so now this is interesting. I would call this a demand zone because of the way that it kind of based, even though it was pre-market. And a lot of this stuff occurs pre-market. Don't discount pre-market. When you're doing supply and demand trading, you gotta look at pre-market, after hours, all of it. You know, and even like a lot of the institutional trading, moves in the pre-market. They buy and sell when nobody's, you know, they don't want to trade through another chop. They just want to put their order in and that's it. And so if they set a big order at 4:30 in the morning or 5 o'clock in the morning or 6 o'clock in the morning, whatever, or 8 o'clock in the morning before market opens, and then I don't know if everyone here has ever traded like penny stocks or just commons. When you trade pre-market or after hours, you have to set it good to close. There's a bunch of different rules to it. You have to set the order and then you really have to have patience and wait for it to fill, right? You can't market. You have to set your limit. There's no market. If you do market, you're going to get a disgusting fill. I don't even know if, actually, I don't even know if market exists in after hours. Somebody let me know. It's only limit orders. There's no market. Yeah. So what that means is, and that's what makes this even better. You set your pre-market. You know the institutions, they'll say I want to buy this much, and they market it. They limit at whatever price they want to buy it at, and then once it goes up, those orders are still sitting there. So when it comes back down to that pre-market level, buyers are gonna, you know, you're gonna see those orders fill up, and the price is gonna come up a little bit, right? Maybe this might not be the best example because it kind of just went right through it, right? It went right through it. It gapped right through it. But over here, they set their limit and price came down, came up, tested it, came back down hard. The rest of the orders got filled right here, right? So don't, you know, if you're doing like 30-minute or 15-minute, go ahead and look at the pre-market and see where it's at. You know, and if I think pre-market price should be part of your trading period, right? Like now that I'm looking at this 30, it looks like there might be a potential supply zone there. Big move out, tested here, and not as big of a move, but it still held. It gapped underneath and then came down and then tested again and then big move out. You know, so these zones shouldn't be the only way you're trading. You should add it to whatever is part of your toolbox. Like price opened down here and moved up crazy out of it, right? Just add it to your toolbox and keep it as part of how you trade. And I mean, you'll see that it helps. You'll see that it'll keep you in and out of trades, or keep you from going into trades that might not work out for you, right? The difference here is that you need to see the basing. So supply isn't resistance and demand isn't support unless you see some basing occur, such as we did on Starbucks daily up here, where it went sideways for a few and then it rapidly fell down. Went sideways for those 2 days and then rapidly moved up, right? So there is a difference there. The last point is sometimes supply and demand flips, meaning sometimes, not always, but sometimes there can be a supply zone sitting at the other side of a demand zone, right? So going back to the example of ABBV, there's a supply zone right here where price bases and rapidly moves down and then even retests it. But all this basing here led to a rapid move up. So there's a demand zone here with a supply zone right on top of it. Now this supply zone might be invalid at this point, you know, because we went through it, but who knows? But sometimes on the other side of one thing, you'll find the other one, right? Like on the other side of this supply zone here, price based for a little bit on these 3 days, and they made a rapid move up. So the real supply zone, the real demand zone could be right here on the other side of this supply zone, right? So what I would do as a you know, to practice this is think about what you trade. Look at your P&L. Look at your favorite. Like whenever Tommy sees AMD, he jumps in, right? Or Tesla, or whatever, he jumps in. Canadian Jennifer, whenever you see Tesla, you jump in, right? So think of it like that. Whatever the things that you constantly, BT's constantly playing Roblox, draw your supply and demand on Roblox, right? Draw whatever it is that you're constantly making money off of, and learn it that way. And if you really want to get good at it, then I think the best ticker to do supply and demand will be SPX. And the reason why is because, and it's simple, just very simple. Clear demand zone here. We can dial in and get exactly where it was, but this is a clear demand zone, a clear supply zone. Some of these gaps are supply, but they get filled so damn quick. But when price gets back here, I expect it to reject, right? Maybe form a cup and handle or something. SPX, the reason why SPX makes it so simple is, and just to keep it simple, is because SPX has the most SPY, SPX, QQQ, IWM. They have the most volume that are traded. You don't have to worry about open interest and volume when you're looking at contracts. You just look at strike price. That's it, right? And likelihood that it's gonna get there. Look at the strike price, check the time. And that's it. Do I have enough time for it to get to this price, or for the market to think it can get to this price? Yes, cool. In. You don't have to worry about volume. You don't have to worry about liquidity. It's there. It exists. So why should you trade? Why should you keep supply and demand on SPX and on SPY and on QQQ and IWM? Because if you're playing tech, if you're playing Apple, you want to know where SPX is at. You don't want to buy Apple calls into a supply zone, like I did the other day with I forgot what it was. On this day, I bought calls. I bought some calls into a supply zone, right? And the supply zone is not drawn here, but these gaps are the supply zone. You see how there's some orders sitting here that didn't get filled because the price opened up down here. There's some orders here that didn't get filled because price, as you can see, boom, came back down. So these are supply zones. If they were upside gaps, then they would be demand zones. Over here there's a demand zone because it goes way up from this move right here. So if you know that there's a supply zone here, and let's say we're trading right here at 40.84, and price is about to enter that supply, I'm going to be very scared to buy calls, because once I enter that supply, my calls are going to get rejected. They're going to lose value. So SPX, and wherever SPX goes, wherever QQQ goes, wherever IWM goes, wherever the Dow goes, the NASDAQ, whatever, ES, whatever your preferred, I'm doing SPX because I need to learn it, right? Whatever your preferred poison is, learn supply and demand on it, and whatever tickers that you play that are based off of it, they will react based off of the SPX supply and demand, IWM supply and QQQ, right? So like, learn it. And SPX, if anybody wants to partner up, I'm going to start drawing all my supply and demand on SPX. So if anybody wants to partner up and compare charts, then we can do that, and we'll do it in a group so that we can all look at it together. And I mean, guys, there's no wrong answers here, and we don't learn unless you make mistakes. So let's drop the ego. Tech Lux, are you here? Do you want to share anything with us? I know we were talking a little bit in DMs. Yeah, go for it. Also, you've been absolutely killing it, filling up that successes channel and taking profit exactly when you need to. So salute. And I hope that some of that has come from what you see, like whatever processes you see that people are trading with and stuff like that. And I know that you started working on a legend for supply and demand and for your charting. Um, so, and I think hopefully I'll give you like another couple of weeks because you said Friday, but I'm gonna give you some more time. But have you started using have you used supply and demand recently in your trading? Yeah, I mean, I think that if there's one takeaway from this for everybody, I would say, you know, draw your supply and demand on SPX or SPY, or if you trade a lot of tech like Tommy does, maybe on QQQ or even the futures, right? And once you can identify some of those zones, now you know how likely is this thing gonna is it'll be like one thing that maybe might hold you back from taking a bad trade. It also potentially might be one thing that might stop you from entering something that's a good trade, right? But I think it's important, especially on all of these bigger names. SPX, I'm just gonna draw it out on SPX. I know that once we hit this level, it's gonna reject. I don't see these. I mean, these shelves look way different here than they do on like X, for example. Like they're very pronounced on X. I don't know why it's not showing up. Oh, because I muted it. Like these are way more pronounced, and for some reason SPX isn't. But mhm, mhm. Oh, got it. Perfect. That's right. Yeah, SPX. If you pull it up on Thinkorswim, it doesn't have volume on it. And then SPX trades in increments. Oh no, ES is it ES? ES trades in increments of like 25 cents. Is that right? Yeah. Uh, so ES might be the better one. And what I like about ES is it fills some of these gaps. Like this doesn't exist on SPX or SPY, or I think maybe it's on SPY, but it doesn't exist on SPX. But this is a clear drop base drop. So this base, I'm gonna go ahead and call it a supply zone. And and I mean, look at where we kind of rejected today, right? And look where we rejected on this day. So it is. I would find it quite useful. Um, and so let me see. Tech Lux Lover. She sent me. Uh, I'm sorry. Did you say it was Sandy? I'm sorry. I have a Sandy that I work with. Stacy, sorry, Stacy, sorry, I'm terrible with names. Stacy. Okay, so Stacy said that she started to kind of go back retroactively and identify some of these charts and kind of see where the movement is and see where supply and demand is. And that's all you got to do to start. You don't got to, you don't have to be like me, where when I first started trading supply and demand, I immediately started taking trades out of supply zones and out of demand zones, trying to implement immediately. You don't have to do that. You can kind of just chill and just see if the reaction actually occurs, see if it's actually real, right? See if it actually shows up in the way that you expect it to. Um, and then from there, once you have some confidence and you see that maybe some of these fresh zones are really showing up in the way that you thought that they would, then like for example, this one looks like this one that I just drew here, this supply zone rejected a bit there, found the base, and then a bunch of sellers stepped in, and now it looks like, excuse me, a bunch of buyers stepped in after selling pressure was done and indecision and balance, and then boom, imbalance. And now every time it came back, buyer stepped in, buyer stepped in, buyer stepped in, until this day. I guess there were no more buyers, and then just flushed through. And so I mentioned Stacy because Stacy just started 3 months ago, and Stacy's been killing it. And Stacy hasn't been posting 1,000% profits like that, like nothing crazy. She's just been consistent, and she's been happy with wherever the profits are, and happy to open to be teachable. And just like I am, I've been doing this for 3 years now, and I'm open to be teachable still, right? Like Frank is dropping knowledge on me every time I talk to him. He's dropping knowledge on me. Jay and S have been dropping on. They're in my DMs, every day, dropping knowledge every single day. And like that's really the takeaway for this: is if you stay teachable and you're willing to try some of these new strategies, and don't overcomplicate it. Like I don't know what Stacy has on her charts. I usually keep some moving averages. I don't trade. This is how I trade. You see my charts that I post during the day. I don't have volume on it. I have some moving averages. I'll have VWAP. I change my moving averages every once in a while, and I have hell a bunch of lines, and that's about it. And then I have some of these yellow and red zone, green and red zones, and that's as simple as or as complicated as I want it to be. So I think that's it. Let me see. Just want to make sure. Yeah, please. Yeah. Go ahead, Jay. Yep. Yeah, like there's people that are trading with us who just have the confidence in what they're seeing. Like I don't feel you're saying like how do you when does it click? It clicks and stay like just like these guys said. I'm just gonna echo it. You know, it clicks here and then they pull the rug. It clicks again on a different way because you switched it up a little bit and adapted. They pull the rug and then they just and that's how it goes. And once you realize what they're doing, like right now we're in a scalper's market and some we've been lucky with some swings, some overnight swings, some 2 day swings, or whatever the case is, right? But I think all in all, I think even especially in summertime, this is a scalper's market. Now, how do you feel confident in what, like for example, some of the plays that we call out? You know, we've seen this. We've been staring at these candlesticks for years now, right? A bunch of us for many months have been staring at this candlestick, and a bunch of us together in a group. You know, there's people who don't officially make call outs who will say, hey, when like for example, BT's posted Roblox like 15 times today. The first time she posted it, it was already going nuts. You know, the second time she posted it, it had already pulled back and it was retracing and about to break and make a new high of day. The third time she posted it, you know, someone would have already been 50% in profit. You know, and like Tommy, for example, when Tommy says, "Yo, look at this, look at this, look at this, look at this," and he's saying it for a reason because he's looked at the chart, he's looked at the bot. The bot's called it 15 times. There's volume, there's market participation, so like the Qs or whatever, whoever are moving up or down in the same direction. You know, and to be honest with you, like some of us, like me personally, I still struggle with it because there's some plays I'll call out, such as Baba. Baba killed me, right? It killed me, and I'm still in. I'm still holding it. I'm down like I think 40% or something like that. But uh, you know, you just have to accept that people are gonna either jump into play or not, and push people to be accountable for their own play. And what I mean by their own play is like if I put out a spy call and you jump in the spy call, you jumping in the spy call, your entry, the time you entered, when you're gonna take profit, that's your play. Even though I called it, that's your play, right? And you just have to be confident that people are going to be able to manage accordingly, you know. And that's it. I mean, it's not more than that, you know. And like I said, I struggle with it all the time, and I just my goal is to give you more winners than losers. That's my only goal. Please, please, please. Right. And to tie that back into the lesson, pick your favorites, two favorites, and SPX or SPY or ES or QQQ or IWM, whatever, whichever one you want, and draw your supply and demand on those three. Focus on those three, and when time comes, it'll click. The whole market won't have to click for you, but your three stocks, your three go-tos will click for you every single day, day in, day out, right? And if one's not moving, the next one's gonna be moving. And if none of them are moving, at least you can play SPX for the day. So, I am going to end my portion of it here. I invite you guys to continue the conversation. I need to do 1 hour of hot ass yoga right now. So yeah, Microsoft is looking great, by the way. Look at it. Microsoft led even more than Apple did, I would say, today. Microsoft was on a roll, and look at all the volume that came in, and they already did earnings. So I think Microsoft is a good one. But yeah, guys, you guys should continue. I have to go. I'm gonna stop this.